Now that we're at the end of the financial year and of course on the verge of closing the books of accounts, all businesses irrespective of the type of entity should be aware of this particular section called section 43B, where deduction for expenses under the Income Tax Act is available only on payment. In today's video, I'm going to be talking about 4 types of expenses wherein deduction is available only if the payment is made before filing the tax returns. Make sure you watch all the 4 because I can assure you that all these 4 expenses are very critical. I am Yashwant Nijagal, a chartered accountant in practice. So the first 2 expenses are associated with your employee cost. The first one being any contribution which is payable towards your employee's provident fund or your employee state insurance or professional tax or even gratuity fund contribution. The deduction for the expenses will be allowed only if the payment is made within the due date of filing your returns. The second aspect would be any bonus or commission payable to your employees. If any bonus or commission is actually payable to your employees and you just record the expense in your books of accounts as payable, no deduction would actually be allowed for such expenses unless and until such bonuses or commission is actually paid. So 2 points to be kept in mind here. One is that if you are claiming deduction for a leave encashment with respect to the payments due to employees for their accumulated leaves, make sure that the payment is made again within the due date of filing the tax returns if you want to claim deduction for such leave encashment payments. So the second catch is that if you want to claim deduction for contribution to different funds such as Provident Fund or Employee State Insurance or your National Pension Scheme, so there would be 2 components with respect to these expenses. One would be the employee's share and the second one would be the employer's share. Now this restriction of being able to claim deduction only if the payment is made within the due date of filing the return is only with respect to the employer's share. So that means to say that if the employee's share is not made within the due date, that is by 15th of April of the financial year, then deduction for employee share of the expenses will not be allowed even if you make the payment within the due date of filing the returns. So the third point would be on account of interest payable towards the loan taken from either a public finance corporation or an NBFC or any scheduled bank. So the deduction for the interest expense would be allowed only if the interest is actually paid before filing your tax returns or before the due date. So what needs to be kept in mind is that whenever you have taken a loan and there is a moratorium period attached to it, keep in mind that the interest accumulated during the moratorium period, though will be accounted as expenses in the books of accounts, the same will not be allowed as a deduction while computing your income because the interest is not actually paid during the respective period. So the fourth and the most important one, which is applicable from the financial year 23-24, is with respect to payments due to MSMEs. So let me explain this with an example. So if you have made a purchase of rupees 1 lakh from an MSE and only 40,000 has been paid within the financial year and the remaining 60,000 is pending for more than 45 days as on 31st March 2024, this 60,000 will not be treated as an expense while computing your income. So with respect to amounts due to MSEs, which is covered under section 43B subclause H, there are several other restrictions and conditions which are too elaborate and I will be doing another video for it. But for the time being, I have written an article on LinkedIn and a link to the article is in the description. Now most of the provisions which I have spoken about in this video are pretty fundamental for professionals like chartered accountants. But the purpose of this video is to explain these provisions and make it understandable for businesses so that they are able to take timely actions within the date of filing the returns and not wait till the end just to find out that these expenses are not allowed as a deduction.